Today's number? 219. That's how many hours it takes on average for adults to go from friends to best friends. Today's other number is 1,000. That's how many hours I've spent with Scott Galloway. However, I still haven't made it out of the acquaintance zone. Welcome to Prof G Markets. I'm Ed Elson. It is February 19th. Let's check in on yesterday's market vitals. The major indices paired gains after the Federal Reserve minutes were released. The official record of their last meeting revealed rising concerns over inflation. It also showed several officials may want to raise rates if inflation persists. That news sent Treasury yields climbing. Meanwhile, Bitcoin fell to roughly $66,000. Okay, what else is happening? Anthropic and OpenAI have grabbed most of the headlines recently, but Chinese companies have been busy releasing very powerful AI models of their own. It seems that Lunar New Year, which began on Tuesday, has become China's unofficial launch season. Alibaba kicked things off with RinBrain, a model designed to help robots understand the physical world. They also unveiled Qwen 3.5, a coding and agent-focused model that is up to 5 times faster than its predecessor. Meanwhile, ByteDance dropped Cdance 2.0, a video generation tool, as well as Dubao 2.0, its deep reasoning model. And then Zhipu released GLM5, which is engineered for agentic intelligence. The through line behind all of these announcements: all of these models are reportedly matching and even beating US competitors on multiple key benchmarks. Okay, here to break down this season of launches, we're speaking with Prof G Media's very own Alice Hahn, co-host of the China Decode podcast. Alice, good to see you.
Hi, Ed, and Happy New Year. Happy Year of the Firehorse.
Happy Year of the Firehorse. That seems to be part of the story here, which is right as the Lunar New Year shows up, we see tons of new models coming out from these Chinese companies, these new AI models, Cdance, Dubao, GLM5. I mean, a lot of these names are kind of dominating the headlines, at least in China. What do you make of these new AI models that have come out of China? How important are they? What do they mean for consumers and investors?
Well, Ed, it's definitely true that Chinese AI has bolted from the stables, to borrow a horse metaphor. And as you rightly say, we've got a couple of models that have just come out. Zhipu's GLM. We've also got Qwen, the new Qwen 5 Max model that's come out. We've also got new AI video generation models that have taken Hollywood, I think, by huge surprise and shock and consternation. But generally, when I look at the models, and I've been using them in the last few days, what's clear to me is that they have improved. They are faster. They are more cost-effective if you obviously compare them to the closed proprietary models offered by OpenAI as well as by Claude, for instance. But really, my frustration with this debate is that it's apples to oranges. People are going to use the Chinese models differently. I think the fact that Brian Chesky, the Airbnb CEO, says outright a couple months ago that a lot of his engineers are using this for agentic chatbots because it's cheaper and faster seems to suggest that the use cases for this are very different, the Chinese models that is, than the American closed models. Firstly, a lot of engineers and just everyday people are using and experimenting with the Chinese models. Qwen, for instance, they're downloading them locally, fine-tuning them and using them for their particular use cases, any kind of projects that they may be involved in. It's got improved privacy because they're downloading it locally. It's cheaper, often 10 to 20 times cheaper than what's offered by OpenAI and Claude. So really, they're using this very differently from, say, potentially you and me, Ed. I use Claude a lot, the enterprise level, because the reasoning is exceptionally good when it comes to the geopolitical analysis, the financial analysis that I'm involved in. So the way that I think about it is that the American models are really focusing on precision, on reasoning at the highest level as they really quest for AGI. The Chinese models are really figuring out how to create a market in which everyday people, engineers, corporates even, downloading them locally, experimenting, fine-tuning, and just capturing the benefits of cheaper, faster models. So I don't think there's a direct comparison. I think that the market exists for both these models, so to speak, to coexist.
One of the things that we're also seeing is just the benchmarking. I can't tell how seriously I'm supposed to take these benchmarking leaderboards. It seems that things are constantly shifting. But when you look at the leaderboards, when you look at the stats on which is the best model, which is the best performing, the fastest, whatever, however you define best, I'm not sure how they define it. The Chinese models tend to be the best, or at least they tend to be at the top of the rankings. What do you make of that? Does that mean that the Chinese models are better? Does that mean they're going to overtake the American models? Or again, is this perhaps maybe apples to oranges and these benchmarks maybe don't make sense?
Well, I love that you asked that question, Ed. I think often that the benchmarks can be red herrings. There's a Goodharting principle in computer science that is applied to this, which suggests that even although they may meet those benchmark goals and exceed the other models, there are certain unquantifiable goals and performance outcomes that they may still be inferior in certain respects to the Claudes and the OpenAIs of the world. So again, back to my previous point, Ed, I really think that if you care about privacy and cheapness and speed, maybe you go for Quen, you go for Zhipu, you go for Kimi. But if you care about, frontier, cutting edge reasoning, precision, then you are still going to favor the Claudes and the OpenAIs. So it's really different universes that they inhabit. And I think benchmarks can often be red herrings, even although there's an incentive for these models to come out and say that we're exceeding the benchmarks of other rivals and competitors. But again, the cost is something that is directly comparable. It's no surprise that the Chinese models are 10, 20 times cheaper. And I think that with cost deflation, inertia will continue to favor the Chinese.
At what point will the cost really change and shift the way the market works here? I mean, consumers, I think they know about OpenAI. They're beginning to know about Anthropic and learning about Claude. So there's maybe some brand loyalty there. But I feel like at a certain point, if you're presented with an option that is 10 or 20 times cheaper, you go with that option. So I guess what I'm a little confused about is, when is that going to happen? Is that not going to happen? Is that not a giant concern for a company like OpenAI or Anthropic or even Google with Gemini?
Yeah, but I do think when we look at technology diffusion and value creation, the way that the software economy really came out of the US and the US dominated that and the value created by software, it's really, I think, going to be the Claudes and the OpenAIs that benefit from the enterprise part of the value chain. The enterprise can pay for it, and they tend to be stickier in terms of the subscription. So I think that we'll end up in a world in which maybe the majority of the value is captured by Anthropic, by OpenAI, but that doesn't mean that there won't be anything left on the table for Alibaba, for ByteDance, for Kimi. It's just a different market that they're inhabiting. And we haven't even talked about some of the other use cases. There's now Chinese AI chatbot toys. That is going to be a big market, I think. And certainly it marries well with China's manufacturing and hardware capabilities.
So you said toys?
Toys, yeah. They're these toys that are being sold that can speak directly to children and teach them and interact with them. I don't know if you've ever read Neil Stephenson's Diamond Age, but it's this kind of AI primer that is part of this story. We're already living in that Diamond Age, so to speak, in this sci-fi realm. That is one area. And then another area in which I would say OpenAI and Anthropic have not been as competitive is in multi-language. If you look at the models coming out of China, it makes sense because they've been trained a lot on multi-language, English, Chinese, and other language data sets. They tend to be better at other languages. And so if you're a global company where you care about a Chinese, Asian-speaking market, that could also be quite an important distinction.
One name we haven't mentioned, which was very popular about a year ago, seems to be less popular today, is DeepSeek. Where does DeepSeek sit in all of this?
Well, I think DeepSeek is still a leader. They still have a lot of the high-level AI talent, and that counts a lot when you think about the AI competition domestically and globally. I do know for a fact, although I'm not sure if I should say this, that DeepSeek is working a lot with local governments, with government bodies in China to integrate AI into local public governance. And I think this is coming at a time where, Ed, will be watching with bated breath in the next two weeks or so, because the 15th five-year plan is going to come out, and it's very, very clear now that AI plus is going to be a huge cornerstone of the policy for the next 5 years. So AI in every realm, including in public governance and public service and utilities. So DeepSeek is still a player, but I think the latest models coming out of Alibaba, even Kimi, show us that in China, at least, the AI race is hyper competitive. It's not just a duopoly, or even centered around 3 players, which is increasingly what's happening, it seems, in the US. There's many different players, and I think they can capture different parts of the market.
All right. Alice Hahn, co-host of the China Decode podcast. Alice, thank you. Appreciate your time.
Thanks so much, Ed.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for today's show comes from Framer. Let's say your marketing team wants a new landing page, so the design team mocks it up, and then your engineering department, who's already got too much on their plate, responds with, "Yeah, we'll get to it." Thousands of businesses, from early-stage startups to Fortune 500s, are choosing to build their sites in Framer, where changes take minutes instead of days to solve this very problem. Framer's enterprise-grade no-code website builder used by teams at companies including Perplexity and Miro to move faster. With real-time collaboration, a robust CMS with everything you need for great SEO, and advanced analytics that include integrated A/B testing, your designers and marketers are empowered to build and maximize your .com from day one. So whether you want to launch a new site, test a few landing pages, or migrate your full .com, Framer has programs for startups, scale-ups, and large enterprises to make going from idea to live site as easy and as fast as possible. Learn how you can get more out of your .com from a Framer specialist, or get started building for free today at framer.com/markets for 30% off a Framer Pro annual plan. That's framer.com/markets for 30% off. Framer.com/markets. Rules and restrictions may apply. Support for the show comes from Public, the investing platform for those who take it seriously. On Public, you can build a multi-asset portfolio of stocks, bonds, and options, and now generated assets, which allow you to turn any idea into an investable index with AI. It all starts with your prompt, from renewable energy companies with high free cash flow to semiconductor suppliers growing revenue over 20% a year over year. You can literally type any prompt and put the AI to work. It screens thousands of stocks, builds a one-of-a-kind index, and lets you backtest it against the S&P 500. Then, you can invest in a few clicks. Generated assets are like ETFs with infinite possibilities, completely customizable and based on your thesis, not someone else's. Go to public.com/ProfG and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/ProfG. Paid for by Public Investing, brokerage services by Open to the Public Investing, Inc., member FINRA and SIPC, advisory services by Public Advisors, LLC, SEC registered advisor. Generated Assets is an interactive analysis tool. Output is for informational purposes only and is not an investment recommendation or advice. Complete disclosures available at public.com/disclosures.
We're back with Prof G Markets. President Trump's chaotic trade policy has rattled Europe, and some countries are weighing new methods to push back. For Sweden, that means reconsidering its use of the krona as its currency and switching to the euro. The country's finance minister just backed a formal inquiry into euro adoption, which would strengthen the country's trade ties to the EU. A full embrace of the EU's common currency would also be a vote of confidence in the euro, just as the dollar's dominance has fallen into question. In the past year, the euro has climbed 13%. Meanwhile, the dollar has declined 9%. Okay, for more on what Sweden's currency plans mean for the dollar and also for the US, we're speaking with Robin Brooks, Senior Fellow at the Brookings Institution and former Chief FX Strategist at Goldman Sachs. Robin, thank you for joining us on Prof G Markets.
Yeah, my pleasure. Thanks for having me.
So this decision, or we haven't reached a decision, but at least Sweden appears to be mulling over the prospect of ditching the krona, which they've had for years, and moving over to the euro. It appears that this kind of has to do with the relationship between the US and Europe, or at least global uncertainty. This seems to be somewhat a response to that. Take us through why this is happening. Why is Sweden considering this?
So, as you know, a bunch of European countries got together back in the 90s and they decided to form a common currency. The euro was began in 1999. There were a bunch of countries that did not join the euro when it was created. The UK, where I'm guessing you have a little bit of a connection. And then Sweden, obviously, Denmark, Poland, Czech Republic, Hungary. So it's not, first of all, any kind of outlier status to not be in the euro. Countries at the time had referenda on whether joining the euro was a good idea. Sweden did one in 2003, and it was rejected by a margin of 56% of the vote was against joining the euro. The margin in terms of popular opinion polls now has moved in the direction of joining the euro. You're totally right about that. That's mostly about geopolitics. So a fear that, in particular, Russia's invasion of Ukraine just makes the world less safe. The US is less of a predictable ally. And so it must be that some Swedes think joining the euro gives you that extra safety. If that is what's going on, then I think that's poor reasoning, because the euro is really just a system of currency pegs. It doesn't confer any kind of safety. You just have to ask the Baltic states, for example, Estonia, Latvia, Lithuania, do they feel any safer from Russian invasion because they're members of the euro? No. Poland, the finance minister just said, we think the euro is a great idea, but we prefer to be on the outside than on the inside. So I think whether or not, from a geopolitical point of view, this is a smart decision, I think is totally up in the air.
It sounds like dumping the krona, taking the euro would mostly be a symbolic gesture to say we stand with Europe, and that it wouldn't really have much impact, or whatever impact it would have would maybe not even be good for Sweden. Is there an element of de-dollarization or debasement in this whole conversation? I mean, one of the big themes we've been exploring recently is the fact that increasingly people are wary of the dollar. They're concerned about debt levels in the US. They're turning to things like gold. And I just wonder if the euro, as the next most popular currency, if there's an argument to be made that we should be transacting in euros. Maybe people in Sweden think that that's the reason why you switch over to the euro. Is taking on the dollar a part of this conversation at all, or is that also a red herring?
First of all, I think you're asking exactly the right question. There's a survey of central bank reserve managers. So these are, picture all the sovereign wealth funds in Asia, all the central banks that have piled up tons of dollars and other foreign exchange reserves. These guys manage trillions of dollars. And this survey is done by the IMF. It's once a quarter, and it surveys what is your allocation of your reserves to dollars versus euros versus Swiss franc versus Swedish krona, etc. The amazing thing is that with all the noise last year, just think back to Liberation Day, the big drop in the dollar in April 2025, as we went through the year, the altercations that President Trump had with the Fed, the massive rise in gold prices that we saw after October in particular, the allocations that foreign reserve managers are making to the dollar have been totally stable. There has been no flight from the dollar. There's also been no flight into the euro. That's pretty remarkable when you think about all the noise that we've had. So I think the lesson that I draw from that is the hurdle for the dollar to lose reserve currency status, for there to be serious dollar debasement, it's pretty high. But again, for Sweden, this is a really big opportunity. Sweden traditionally has always been considered kind of a high beta currency. It's super volatile. You didn't really want to hold it because it banged around all over the place on news. Most recently, so over the course of the last 6-9 months, the Swedish krona has started trading like the Swiss franc, so like a safe haven currency. So when global uncertainty goes up, For example, Liberation Day tariffs, Swedish krona actually does well. So I would put the Swedish krona in the same bucket as gold, silver, platinum, you name it. It is this safe asset. What exactly is going on with dollar debasement, I think, is a separate question. Incidentally, the dollar is up today because the FOMC minutes talked about hikes, and that surprised the market. So I think there's clearly a flight to safety. What exactly people are fleeing from isn't quite clear yet.
It's interesting because foreign exchange currencies, these are conversations that are typically in the purview of investors, Wall Street, think tanks, economists, etc. But the de-dollarization question has generated a lot of heat, and a lot of people are interested in it. And I think because it communicates a possibility that this world order that we've all known and lived with for so many years, that where the US is the dominant power, there is a hegemony of America, it's reflected in the strength of this currency, that may be coming to an end. And I would add, a lot of investors are making trades off of this macro possibility, which is why we're seeing what we're seeing with gold. But it sounds like you, as a real currency expert, as the chief FX strategist, former chief FX strategist at Goldman, it sounds like your view is that maybe this is a little bit overdone. If you're actually looking at the global reserves of the dollar, that actually this is more kind of bulk than bite.
Well, I mean, we know that in the United States, fiscal policy is kind of out of control. Debt is on a trajectory that is not good at all. Deficits are out of control. The thing is, that's true for many other countries too. Everyone is in trouble on fiscal. And so in a relative sense, the United States is worrying, but relatively speaking, it doesn't look that bad. So when you look at, for example, risk premium in the bond market on treasuries over other comparably measured government bonds in other countries, actually the United States smells like roses. It sounds crazy. So I think where we are is that there's a debasement trade, for sure. It's just not clear whether that debasement trade is against the dollar or against all fiat currencies together.
Yeah, I think the question I always return to is, sure, maybe it's bad. What's your alternative?
Exactly.
Is it the euro? Is it the yuan? Is it Bitcoin, which is also kind of bad as a form of currency? Is it actually gold? These are all very interesting questions. We are out of time, but thank you for joining us. Robin Brooks, Senior Fellow at the Brookings Institution.
Thank you.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for the show comes from Vanguard. The role of financial advisor is to do everything you can to set your clients up for success. There are plenty of ways you can go about it. Maybe a leveling up of your fixed income strategy, but bonds can be tricky. The market is huge, rates shift, and risks hide in plain sight. That's why having a partner with scale and expertise matters. Vanguard brings both. Vanguard bonds are institutional quality. Institutional quality isn't a tagline, it's a commitment to your clients. It means top-grade products across the board. The lineup includes over 80 bond funds that are actively managed by a 200-person global squad of sector specialists, analysts, and traders. A lot of firms love to highlight their star portfolio managers, like it's all about that one brilliant mind making the magic happen. Vanguard's philosophy is a little different. They believe the best active strategies shouldn't be locked away with one person. They should be shared across the team. So if you're looking to give your clients consistent results year in and year out, go to see the record for yourself at vanguard.com/audio. That's vanguard.com/audio. All investing is subject to risk. Vanguard Marketing Corporation, distributor.
We're back with Prof G Markets. So yesterday we discussed this feud that is unfolding between the AI company Anthropic and the Pentagon, or more specifically, the Secretary of War, Pete Hegseth. And before we end here, I'd like to unpack that story a little bit because I think it tells you a lot about where we are in this AI moment. So just to refresh your memory, one of Anthropic's biggest customers is the Defense Department, which is paying hundreds of millions of dollars to use their AI tools. But as of this week, Secretary Hegseth has threatened to cut ties with Anthropic. He has even gone so far as to put them on the supply chain risk list, which is a label that is usually reserved for foreign adversaries. They're also threatening to cut ties with any company that does any business with Anthropic at all. In sum, Anthropic is now on the administration's shit list. They do not like them. The question is, why? Well, it all centers around two main disagreements. Number one, Anthropic has told the Pentagon that they do not want their technology to be used for autonomous lethal weapons, i.e. robots that kill people. And then number two, they also don't want their technology to be used for domestic mass surveillance, i.e. spying on American citizens. And according to the Defense Department, this is a deal breaker. In fact, such a deal breaker that they now view Anthropic as a potential risk to America. So there's a lot that is concerning about this. The fact that we're now requiring that AI be used for things like drone strikes, also that we're requiring that AI be used to spy on Americans and surveil them. These facts are scary in and of themselves. But what is perhaps more striking is the hypocrisy here. The fact that this is coming from an administration that has long stated that this is exactly the kind of thing we need to avoid, the threat of government surveillance, of big tech surveillance. Trump himself said that one of the goals of the campaign was to, quote, monitor our intelligence agencies to ensure they are not spying on our citizens. Jim Jordan warned of the, quote, collusion of big tech and big government. J.D. Vance, the vice president, cautioned about companies, quote, using artificial intelligence to surveil Americans. He said, I worry about invasions of privacy. So this is exactly the thing that MAGA was supposed to prevent. This collaboration between the government or the deep state and also with technology companies to surveil the American people. And now we find ourselves in this very ironic position where an AI company actually doesn't want to move in that direction. They don't want to surveil citizens. They're down to work with the government, but they're not down to spy on Americans. And for that, they are being punished. Now, we can dwell on the hypocrisy here. It is quite striking, but that might also be missing the point. I think the larger point is we now know where this is all headed. And that is despite the virtue signaling, arguably from both sides, about the need to rein in big tech, to reduce the surveilling powers of the largest corporations and of the government, I think it is pretty clear now that is not going to happen. AI will be used for weaponry. AI will be used for autonomous lethal drones and operations. AI will be used to track Americans, to spy on Americans, to surveil Americans. This is simply where we're headed now. And I should also be pretty clear here. Most other companies, aside from Anthropic, are on board for this. Companies like OpenAI, companies like xAI, Google, and of course, Palantir, they are all down. Now, the only thing that might get in the way here is the same thing that I wrote about in my newsletter this week, and that is the American people. As I've written, AI is becoming increasingly unpopular. Less than half of Americans say they like AI. Less than a third of Americans say they trust AI. And it could be that this is the straw that breaks the camel's back, that voters decide, actually, we don't like this direction. We don't want this technology. We don't like how it's being used. And therefore, we're going to do something about it. We're going to vote you out. That could happen. And I think the political ramifications of AI is now something that investors need to take really seriously. We can't really ignore it. Having said that, there are still many Americans that don't really know about AI, that perhaps don't really care about AI. And so until this reaches a boiling point, I do think that the current trajectory is the most likely. That AI will become fused with government. It will enable a surveillance state. It will be used to track people, target people, and sometimes kill people. Everything that MAGA said that they were supposed to prevent, ultimately, that will transpire. That is where the trend is moving, and barring some extraordinary event, that is likely where it will end. Thanks for watching Prof G Markets from Prof G Media. If you liked this episode, subscribe to our YouTube channel and tune in tomorrow for our conversation with Aswath Damodaran.